Hello everyone and welcome to today's video. Hope you all are doing good. So in my previous video regarding mutual fund, I received few comments whereby the viewers wanted to know that what CAGR actually means. What is this CAGR? And here is it. So today we'll be cover what CAGR actually means and how it can be used by the investors in understanding the growth rate from various other instruments while comparing the CAGR between two different investment opportunities. So let's get going. The topics that we'll cover in today's video are what is CAGR, the CAGR formula, the CAGR returns in mutual fund, its return in stock, the difference between XIRR and CAGR, and the concept of CAGR when one number or 1 year's return is negative. So to begin with, let's understand what CAGR actually means. So CAGR is, to start with the full form, CAGR is compound annual growth rate. This shows the actual return from an investment. However, CAGR is popularly used to gauge return from mutual funds and stock and not so much from banking. So one may consider this as an annualized yield. Okay. Now let's understand the CAGR formula. CAGR formula is basically the division between the ending value of the investment that you have done upon the beginning value or the investment value that you have put in initially, raised to 1 by n. Here the n means the number of years. Whole of this minus 1. Let's understand this with an example. So suppose the initial value of your investment was rupees 20,000, that is you have put in 20,000 today. And after 3 years, that is in 2025, the final value is 30,000 rupees for that value, that initial investment. So here the CAGR or CAGR will be calculated as 30,000 divided by 20,000, the initial value, raised to 1 by 3, that is in power. And whatever value will come, that would be subtracted from 1 and we'll get this percentage. So this is a 14.47 annualized growth rate from this investment. Next one is CAGR return in mutual funds. So one may measure the performance of mutual funds using CAGR. But the average annual growth rate of mutual fund or even any other investment asset that may decline over a specified time period. For example, let's understand the CAGR return of mutual fund with the below example. So suppose you invested 1 lakh rupees in XYZ mutual fund in 2015 and the NAV of XYZ mutual fund was 20 rupees per unit and you got 5,000 units. In short, you had an investment of 1 lakh rupees. Okay. Now, when you tried redeeming all these units after 3 years, that is in 2018, the NAV was 25 rupees per unit. So now the mutual fund value or the investment value became as 1,25,000. Here, the CAGR of mutual fund will be the end value, that is 1,25,000 divided by 1 lakh, raised to one third, that is 1 divided by the number of years, that is 3. Whatever output comes would be subtracted by 1 and we'll get the CAGR, which is 7.72% annualized growth rate. Now let's understand the CAGR return in stocks. How the CAGR return is calculated in stock. So you may use compounded annual growth rate or CAGR to determine the performance of your stock investment over a set of period of time. We can understand this again with an example. So suppose you have brought 200 shares of XYZ company at rupees 100 today, and after 3 years, you sold those 200 shares at 150 rupees each. That is, again, the CAGR or CAGR of the stock will be calculated as 200 into 150, that is 30,000 divided by 200 into 100, that is 20,000. So 30,000 divided by 20,000 raised to 1 by 3, and we'll get the CAGR of the stock. Let's understand the difference between CAGR and XIRR, because these are the two terms that we can see while understanding the investment or while understanding the returns from various investment options available in the market. Let's understand what these actually mean. So XIRR and CAGR. CAGR is accurate when you make a one-time investment. However, you may invest in mutual funds in a systematic investment plan, that is through SIP. हर महीने कुछ ना कुछ amount जा रहा है. Suppose 1,000 rupees per month, so every month that 1,000 rupees is going into that mutual fund. So when the investment is going in multiple times or in multiple slots, then you have to refer XIRR and not CAGR, because CAGR is accurate only when you make a one-time investment. You will find the XIRR for multiple investment may be made in form of SIP over the investment tenure. So XIRR is an aggregation of multiple CAGRs, because you will find that the earning percentage is different for each tenure of investment. बिकॉज अगर मैंने आज 1,000 रुपीज एक म्यूचुअल फंड में इन्वेस्ट किया, मैं अगले महीने फिर कर रहा हूँ, तो वो एक महीने का डिफरेंस उसका जो है वो अक्यूमुलेट होगा मेरा नेक्स्ट इन्वेस्टमेंट में. करेक्ट. So if I want to look at only that 1 month, and then accordingly that 1 month will get accumulated as and when the investment is done multiple times during the tenure of that investment. So CAGR will actually not provide you with the accurate result of the return, and hence XIRR is the perfect return calculator during that moment. Next is the difference between absolute return and CAGR. So what absolute return is? The return that you will see over a period of time, irrespective of annualized factor. Sorry, irrespective of annualized factor. So let's understand this. Suppose the value that you initially invested is 10,000 rupees, and the value you got after 5 years is 20,000. Correct. So 20,000 upon 10,000. This is the end value and the beginning value, correct? Now to calculate the absolute return, what we'll do is 20,000, that is the end value minus beginning value, that is 10,000 upon 10,000. So we got a 100% return. Here we'll not consider how many number of years were taken into account during that investment tenure. Okay, so this will not give a stint of annual factor. Whereas in CAGR, we take into account the annualized factor as well. That is, when we discussed the formula, we saw that it is raised to in the power of 1 by n. So that n actually means number of years. So absolute return will show you what return you have got from that investment class, irrespective of the tenure. 5 साल है, 10 साल है, कितना भी है, वो खाली बता देगा कि इनिशियल से लेके अभी तक जो वैल्यू है मुझे टोटल कितना रिटर्न मिला. Whereas CAGR, as the name suggests, it is the annualized growth rate. It will factor into account how many years the investment was put in place. Now, one question will definitely come कि अगर मेरा किसी एक साल में return is negative, so how will CAGR be calculated? Correct? Because see, 2015 में मैंने 10 लाख इन्वेस्ट किया, 2016 में ठीक है, it went up by 10%, 2017 में it went down even below the initial value, that is 9,50,000. So this is the annual growth rate, correct? And this is the negative line items. How will I take into account while calculating CAGR? So as we'll refer back to the formula again that we have discussed in the previous slides. The formula is end value divided by the initial value raised to 1 by n number of years. That is 6 years over here. So it will be 13,03,236 divided by 10 lakhs raised to 1 by 6 minus 1. That will give you CAGR. It does not take into account any negative return for an annual growth. So it even has a pro and it even has a con. So let's understand what is the pros here. So here the CAGR will not actually give you the picture of when you receive the negative return. It will show an annualized return in a stagnant manner, in a mean manner. Mean manner as in the total absolute return taking the average out from the number of years the investment was there into the account. It will show you a tentative return that you would have received if the growth was there in the stagnant form, and it provides a picture from that point of view. But when we take into account reality, we'll understand that the return is not actually there on ground considering the real situation and the real rate during those years, because किसी साल पे नेगेटिव रिटर्न भी हो सकता है, किसी साल पे पॉजिटिव भी हो सकता है. तो CAGR जब अगर मैं इसका देखूंगा तो इट विल ऑलवेज बी स्टैग्नेंट इन द फॉर्म के it will show me near about same numbers for all the years. The fact being, it only takes into account the first and the last value and the number of years. It does not take into account each year's or each period's value during the journey. Let's understand this with an example. So, in my mutual fund series, whereby I explained you which are the best mutual funds according to us. So here, this is the CAGR table which I had shared in that video as well. So here you will see that the CAGR is actually hovering in the same range, close to same range. अब 5 years, 3 years, 2 years, 1 year. ठीक है, अभी 5 years में 23% दिया है. Does this mean कि it was 23% every year? No, right? किसी साल पे वो negative 20% भी गया होगा, किसी साल पे positive 40% भी गया होगा. But this is the average which we are getting. Hope you understood, right? So that's it for today's video. Hope you liked the video. Do post in your doubts in the comment section. We'll be more than happy to address them. We'll be out with a new video tomorrow. Till then, stay healthy, stay safe. And yes, do subscribe to our channel and hit the like button. Thanks.